All right, welcome to the Mentis podcast. Today we have Meg Epstein with CA South. She is the CEO over there. They have over $1 billion of development underway. Thank you, Meg, for joining us today.
Thank you for having me.
Well, first off, I think the elephant in the room is I don't talk to a lot of female developers, and I think that's awesome that you're having so much success. What attracted you to this industry, and how are you cutting edge in the market today?
Yeah, I originally started in California. I was in high-end homes, so extremely large, $50 million plus homes. And when I moved to Nashville, because I met my husband, I quickly realized that there was not a $50 million home market. So I transitioned into commercial. That was in 2016. And I took the CCIM courses, which were really great in terms of establishing an investment mindset for commercial, and just started doing my first couple of projects in Nashville. And so I never really thought about it being like a minority-owned company or anything, but I quickly realized, especially in the South, that there's very little, female, like women developers for sure.
Well, I'm glad it didn't stop you, and it seems like you are, kind of blazing a trail here. Tell us about why you picked, kind of focusing in Nashville. I mean, you can develop really anywhere. I mean, I know you live there now, but is it important to you to like be near your projects, or kind of what is, what's the, I guess, thesis on where you're investing?
Well, I think having spent my whole life between California and New York, and San Francisco and Los Angeles particularly, and moving to Nashville, realized how, like, even before the big, everyone started migrating here, realized how much better the quality of life is in Nashville and in other Southeastern markets. And so I think it's a really good, not only location, but just cost of living and culture, and you have the music. And so I knew that people were going to continue to move to Nashville. And so that sort of growth, we were on the forefront of that. And I think institutional capital from, New York and more of the primary markets has since moved here, but that wasn't the case when I first started. So we kind of had a leg up there. And that's sort of what, is my investor basis, was around bringing institutional capital to the Southeast. And so we're now in Huntsville, and we're looking in other Southeastern markets for our next projects.
Yeah, Huntsville's got a really compelling, kind of case for it. I mean, it's got a shocking number of government funded jobs in the sectors. It's got actually a lot of like research, and I'm pretty impressed with what Huntsville's got going on, and is one of the most conservative places in the country. It's likely you're going to get your evictions and get your entitlements in a quicker way. Not that really matters, but it does kind of play into, I guess.
Oh, definitely.
Where people are picking. So if you don't mind, let's walk it back a little bit into COVID. How many developments did you guys have underway at that time?
Probably like 7 or 8. Usually we have going at once.
Okay. So you had a large pipeline. Did you pause any of the projects? What were you doing to try to mitigate all of that inflation?
No, we didn't pause anything. I mean, our fundamentals have always been very supply constrained asset classes. So at that time we were heavily in industrial, and then like our mixed use urban infill product, which is, it's basically multifamily, but it's opportunity zones and more of a boutique product type that looks and feels a lot more modern with better architecture, I think, than a lot of, more commoditized development. And so that we did not hit pause. Nashville really blew up during COVID because I didn't realize that it was going to cause so many more people from California and New York to move here. And so that brought, the investor interest from all of these private equity funds that needed to place their capital but didn't want to place it in California and New York anymore. So it was actually a really great time for us. That's when we hit over $1 billion and created some partnerships with, like a public REIT, for example, that was used to only investing in the Northeast, and then they saw Nashville as a bigger opportunity. So I think it brought a lot more investor interest, and then obviously was a bit of a catalyst for people moving to the Southeast.
Okay, so you were kind of one of the beneficiaries of COVID, if you will, and kind of right place, right time, and that's part of being in business, and it's nice to have those wins. So what did you do to mitigate kind of the troubles that came with it, though? I mean, with growth, you still had probably those inflation issues that we were talking about, and obviously now we're dealing with interest rates and carrying projects. Any kind of trade secrets that you guys are willing to reveal here for us?
I mean, it's mainly just, not doing, I will never do a development that's so, like, doesn't have any enough margin in it. Like, we are not merchant builders that just, build to such like slim margins that you don't have that room for error for interest rates or construction cost increases or construction delays. The biggest thing that impacted us beyond interest rates, and that could just have been lucky because of the timing of when we started, and we're entitling projects. Like right now, I'm in the entitlement phase of a lot of projects, and so the debt that we're underwriting still works, assuming that we're getting debt in a year from now. But I think that dealing with like electrical panels being delayed because they're so backlogged, and mainly the issues around labor that came with COVID, a lot of people, tradesmen, leaving the workforce. So we've drawn our workforce from Alabama and other neighboring states to continue to get construction done in Nashville, for example. Pivoting into the industrial sector was something that I was really happy that we did, because again, if you just really focus on underlying fundamentals and being, supply and demand, it was inevitable that, logistics and industrial users were going to need a place to go, but there was less than 2% vacancy in the asset classes we were developing. So even with COVID and increased interest rates, that demand doesn't go away. It's just about finding the right projects and not having such a machine that you have to do bad deals. So we just have to remain very pragmatic in our approach and not get emotional about the projects.
That's right. They're just numbers and it's just math sometimes. I guess, what about the loan structures that you kind of like alluded to there? What about going forward? What are you guys doing? Are you doing interest rate caps? Are you just putting more money down? Are you kind of just willing to take that floating rate risk, fixed rate?
Yeah, I think for now, and it has affected some deals. Like I said, I've always been a bit bearish on multi, because so we also develop condos as well. And again, that's a supply thing. I hate doing condos, but they're very profitable and they're undersupplied. So we do some condo projects in the right locations, but our multifamily product is underwritten over a 10-year hold. And so that allows for a little bit more volatility in the short term, because your returns are averaged over 10 years for your investors. And so I typically, if I'm doing a multifamily project, it's on a 10-year hold. And so going forward, we're just, we adjusted our underwriting to include, hopefully construction costs will be going down, but lower leverage, higher interest rates. And if it doesn't work, then we're not doing it. And a lot of ground up deals don't work. And so more recently, we've focused on more value add strategy and taking advantage of impending distress coming. How can we reposition some properties in our niche asset classes to account for, being able to possibly buy for less than replacement costs? Because there are a lot of deals that just don't work that maybe would have a couple of years ago.
Yeah, there's no doubt that the pressure from the Fed is putting maybe be a little bit more in balance with the market, and not have to worry about crazy things like your electrical panels not coming in time, or your labor shortages. I think all of that is kind of coming in the future, but I think, at least in our experience, we're gonna have to wait it out and just kind of get through it, and it'll come.
Right.
So what about internally? Did you guys choose to bring like project managers or asset managers or like I guess maybe even property management? What did you bring in-house first, and what was like something that you wish you had done to help you grow a little bit faster?
Well, I think my C-suite is extremely amazing, and that took a lot of honing in to get the right people on the bus. So I have an incredible COO, CFO, Chief Development Officer, and I think for any company, those roles are really important, and you kind of build from the top down. We did have some like greener people that have stepped up to the plate, and we've sort of groomed them, and I found that that's a lot easier than trying to bring someone in that's plug and play if you have the right C-suite. But one thing, like right now we're hiring for an asset management position. I think it's hard having that gap between greener people and super advanced people. And so that's something we are working on filling out a little bit more. But I think that, we've gotten a lot done for the amount of development we do with a smaller team because everyone's extremely qualified, and it's very evident if there's a weak link, and frankly we've had to eliminate a lot of people for that. So I think the team we have now I feel really excited about, and have been working together long enough to pull it off. But it's hard. I mean, we had two people. I think when I first started it was just me, and then I hired my kind of right hand, but now we have 14 or so, and so there's it's been hyper growth for sure for the last couple of years.
Well, that's awesome to hear. And did you build that team locally? Are you doing remote work, or what's your belief on kind of the office space?
Everyone's been in the office except for about 6 months during COVID, in and out. But no, everyone's here in Nashville, especially given ground up development. You definitely need to be here and have the local relationships with the local jurisdiction and contractors and things like that. So everyone is based in Nashville. My CFO, a lot of people want to move to Nashville, so that's been a couple of people. My director of capital markets came from Montana. My CFO came from DC. So we do get a lot of inbounds on people that want to work with us because they have heard about us, and people want to move to Nashville. So that's also kind of helped.
Yeah, no doubt. I mean, picking the market, not just for where you're building, but who you can hire is almost more important on the business ownership side.
Yeah.
And so I guess, what does your day look like now that you have, kind of what it sounds like is your operations folks in place? Are you kind of leading the charge, looking for new deals? Are you always raising capital? Where's your time spent?
Ideally, my day is spent raising capital and kind of overseeing finding projects, and then, more like PR type things that you just can't outsource. But on the operations and finance side, that's pretty well taken care of by my C-suite. But there's never, I'm still working on that. I mean, we're selling a project right now, and I'm very involved in every contract negotiation. And so I think what's crazy about development, or even if we're doing a value add, the life cycle of the development is so long that it could be 4 years even. And so there's things that if I started a project 3 or 4 years ago, it's like I'm just inclined to hand that, to finish it up. And then as we get new projects and the team builds, someone can take it from the beginning. And I think that's a better way to approach it, just because there's so many moving parts of the deal and historical information. And so as I wrap up projects, I kind of, I'm turning over those functions, and that's freed me up to be focused more on like capital raising and finding new projects.
All right. Little technical difficulties.
Sorry
Can
about
you-
that. Yeah, I don't know. My internet seems like it's fine. Sorry about that.
Oh, okay.
I would ask her about the hive
Yeah, the
condos that Nashville is supposed to open this spring.
all right. Let's go back because I'm gonna just like act like we kind of you just answered that, and I'll just take it, and then I'll ask you the next question. And I want to kind of pivot back to that building that you're selling, and then Allie's over here is very interested about your hive project. If you don't
Mhm.
mind talking about that one as well.
Sure. Sorry.
Okay. All right. Well, yeah. I mean, I think a lot of people who aren't in development don't understand that some of these projects actually take a long time to carry across the finish line, and like you're involved for 4 or 5 years at a time, and you're so ingrained in all those nuanced details. It's helpful when your team gets involved early on. That way, you can kind of continue to free up your time, and I'm sure that'll pay dividends for you as you're able to kind of focus on the bigger picture. And that's, I'm sure you guys are really going to take off even more than you already have. But you had mentioned a building you're selling right now. Is there, anything that, is there, I guess, a new project that you're bringing on to replace that one, or, when do you expect that to close?
At any given time, we have about 10 projects going on the industrial and mixed use front, but we did just wrap up our, it's called Hive. It's a downtown condo building, but what's unique about it and what investors like is you can short-term rent out the units. And so it's a business model. We've done 2 other ones before very successfully, and basically it gives the option for the buyer to short-term rent out a unit so they can either use it or have a place in Nashville, but when they're not there, or a lot of them just rent it out as an investment. And it's a really nice option for people to have a cash flowing asset that they can just turn on, and especially during the summer season, and there's such an undersupply of hotel rooms in Nashville, and bachelorette parties come. It's more geared towards group travel or someone that's staying longer, but it's a great individual commercial asset that someone can own, but have more of like a cash flowing business out of it. So you get the depreciation and everything. So that just launched the last week or so. That's been going very well. And yeah, it's exciting.
It sounds like it.
Yeah, it's called hivenashville.com.
Okay. Now condos are notoriously difficult for all of the changes that each individual buyer wants. Are you limiting, kind of what people are able to spec for the building? Or are you kind of just delivering it? This is your only option. You can change it later, or how did you navigate that hurdle?
Yes, well, just because we've been in the short-term rental space for so long, I think we kind of understand what people want. So we give people options not in terms of the finishes; those were all selected. It's a very nice neutral palette, but we offer for people to be able to buy furnished units. So it has all the furniture, everything you would need to basically turn it on and start renting it. So like coffee maker, sheets, silverware, all of that. And so people can either furnish it themselves, and a lot of people kind of create their own, like, oh, I want to make this the Dolly Parton unit or whatever, and make it appealing to people that are traveling here. And then some people just want the turnkey option. So about half the building is furnished and gives people that ability to just go, oh, I just want a unit in Nashville, and if I'm going to use it, okay, but otherwise it's going to be rented out when I'm not here.
That's awesome. And are you guys managing that then, or are you going to just kind of sell it, walk away?
No, we are going to be keeping quite a few of the units because it is a model I really love, and I try to move away from just being a merchant builder. But it's managed by a company called Placemaker that specializes in short-term rental, and they're more of an institutional operator that really understands building fundamentals and how to deal with people checking in and out and luggage storage, and how do you rent out the pool cabanas and all the things. So
that sounds like a really, a really unique model that it sounds like you're tapping into a really a deep market there in Nashville. I mean, you mentioned the bachelorette parties and everything. That is really quite a popular thing that I don't see going away anytime soon. And it sounds like it's going to go really well for you.
Yeah. Yes.
Yeah. I mean, as far as I guess the favorite asset class, I mean, you're not talking about like short-term rentals or kind of you talked about a lot about industrial and multifamily. Any hope for the office space?
No, I don't think so. I mean, and not for me. There's plenty of really good office developers, but we try to stick to our niches. So industrial and mixed use urban infill are really where we're focused.
That makes sense.
We did have an office building, an office condo building that we're still selling in Franklin, and that was fine. It was a good project. And I believe, especially in Nashville in the Southeast, that investors want to own versus rent, because the rents have expanded so quickly. And so for someone like me, I own my office. I would hate to be paying a lease. It's a great option. That one's called Alston in Franklin, but it's a great option to own your office space, but it only works for certain users. Like if you're not hyper growth, like a tech company probably wouldn't be the best candidate for that. It's better for like financial planners or attorneys or doctors that just want to own their office space and, not pay rent essentially.
Sure. And there's a big market that people who want to do that, kind of make their office their own. They can renovate it how they want and so on, and actually spend $100,000, $200,000, $300,000 renovating their office and not just worry about giving that away to someone else, which I've seen as the pushback in that space.
Mm-hmm.
Something that you mentioned early on in our talk here, and I've been saving it kind of here towards the end, is better architecture and getting, something that's a better design and really better buildings, more efficient, whether it be design or whether it be energy efficiency. Could you tell us what you're doing? Are you really involved in it? Is this just a passion of yours? Are you just hiring better architects? Like what are you doing to like deliver a better building? Because there is so many square boxes built in America, and just spending a little bit more time, I agree, is a phenomenal way to differentiate yourself. And it sounds like you come from California with a flair for style, with $50 million homes. Obviously, that's going to be extreme architecture. I guess, what are you doing to apply that to your project so that, you're really standing out from the crowd?
Yes. Well, having come from California, I do think my design aesthetic is very different than what you see in the Southeast. So one thing we've done is, in the beginning and continue to do is we'll use design architects or architects that have come from California and kind of have a different look and feel. I've never wanted to be a luxury developer. So on my condos and multi, I'm never competing with the Four Seasons or something, but it's still, we call it affordable luxury. It's like a middle market product, but just really designed very well and a lot more modern than what the typical spec is in the Southeast that, kind of gets stamped and repeated a lot. And so we just try to be a lot more thoughtful about using modern architecture, clean lines, clean cabinetry. The look and feel of the buildings are different, but we've done that by using California architects and then using more local architects for the actual plans. And same with the interior finishes. I just refuse to build and design something that looks like everything else that's just sort of unimaginative. And so I think we've done a good job of blending affordability with modernism. And so I think that's given us a really great edge. And then just to really differentiate, because there's a lot of developments, and when someone's looking to buy or rent, you want them to, find something that stands out. And then we also, I sit on the board of Civic Design Center, which is a Nashville-based group, nonprofit that focuses on things like wellness and walkability in the urban environment. And so we're always trying to make our buildings more pet friendly and walkable and bring the outdoor, indoor, in spaces. And we also focus a lot on local artists. And so our buildings won't have, generic art. It's all, you usually choose a local artist to feature in the building and commission them to design art around the building. And a lot of the times it'll be like even a woman, local artist that we can feature or is incorporated into the project, depending on what the project look and feel is. And so it gives a little more personality and life than just an institutional asset, even though we're, larger scale.
Sure. It sounds like you're spending quite a bit of time and effort going above and beyond. I mean, you don't have to put that local artist in. I mean, but it does make a difference. And are you seeing it pay dividends, or are you just kind of a good feeling, you feel like you're doing the right thing?
Our track record, yes, we have a really strong track record. It's been an amazing market for sure, but our average IRRs are over 100% or something. So it's hard to say if it's like, is that because the local artist? I don't know, but I think overall we get a lot more investor interest and user interest because our projects are differentiated. So I think it's all of the things. I don't think it's one of the things, but I think if you do a good job and you can separate yourself out, that always ends up in returns inadvertently.
Sure. So where's next? Like what's next for both you and the company, and I guess kind of at a macro level, the country? What are the markets that are going to be hot in your opinion, and when do we get out of this interest rise, kind of increasing interest rate environment and back to more of a stable, kind of normal
Right.
economy?
It's so funny. I have this thing on my desk. Someone gave me, a banker just came to visit and he's like, here's your crystal ball. And I brought you one. So obviously it's really tough. I mean, the rates of interest, the interest rate rising is extremely scary, how quickly it happened, because no one really saw that. And historically, it's never raised that high that quickly. And so as you're seeing with big institutions and Blackstone and people, the inventory starting to get very distressed, particularly in the office space, I think that I'm hoping they'll stop soon. I mean, they're causing a recession. We're in a recession now. And so unless they're completely trying to, obliterate our economy, which I don't think is their intention, I would hope that it would, taper down soon. But no one also saw what happened. So we're not planning for that. I think we're just only focused on projects that work in today's environment and that we can get funded. That being said, I think that for us, we're very, very selective, a lot more than we used to be about ground up development. And so I anticipate the industrial sector being one of our strongest asset classes in the Southeast, particularly because of all of the growth and people continuing to move here. And I do think if the recession continues, or if it's several year long recession, that people are going to be continuing to move here because of the job growth and the cost of living. And so I think that our focus will only ever be on the Southeast. I never see myself, ever, even if we hit $10 billion developing in California or farther north. But I do think that, ground up is going to be tough for a while. And so we have some larger scale projects. One is a phased over $1 billion project on the river here in Nashville. That's going to be that, even if we just did that for the next couple of years, we'd be okay. And so I think we're being really looking at these larger, longer term plays, as opposed to being a more merchant build model where we started, as well as exploring value add and what we can do to take advantage if there are assets that you can get below replacement costs and repositioning them in a way that still, works. So I think for us, it's going to be a heavier focus on industrial. It's typically been about 30% of our portfolio, and I call it about 50% of our pipeline, as well as value, looking at value add.
Yeah, I mean, getting into the value add space has always been really kind of a good kind of a backup. And as developers, we like to kind of blend a little bit of new development with the value add, and that way there's still the fun new stuff. Because I don't know about you, but for me, the developments are way more fun to focus on and kind of engage in. Value add's kind of like, all right, well, we're just gonna do some deals, keep the business moving forward. It maybe doesn't inspire as much imagination. You got to bring the best you can to it. But for me, I think that development definitely is a more fun place to spend your time. As a matter of fact, that's an interesting question. I hear at a lot of conferences that people don't necessarily like development because it's too much risk. There's obviously large reward, but too much risk. How do you balance it? Like, how do you justify, taking the risk, or is it just kind of in your blood now and you'll never stop?
I know if I had known, if someone told me how hard it was, I probably wouldn't have started. But once the when I first started, I had no money, no experience, and no access to any institutional capital. I cold called all my investors in the beginning, and I still cold call people. And so after you can build a ground up condo building, which is one of the hardest asset classes to pull off, I feel like I could do mostly anything, right? Because that is, so buying an existing multifamily building versus building a ground up condo building in terms of everything that goes into that, financing, the construction, is 10 times easier to do value add. And so I think we're very well positioned for pivoting, and it does make me feel like we have a really great breadth in terms of what we can pull off. And so I think that ground up you just have to be extremely selective now and just factor in a lot more. And we've always been that way in our underwriting, and I'm not a huge firm. And so it's not like I have to do, $1 billion more in development. We can be really selective and just say, okay, we're only doing this because it's in, it's within a mile of downtown, and this location's never going anywhere, and it still works even if it takes 2 years longer and interest rates rise and construction costs are up 5%. If that still works, then we'll do it. But finding those deals and being more selective is going to be key in this market. There's a lot of people that made a lot of money because because of where interest rates were historically low, and it's pretty easy when rent growth so, prevalent to make money. But I think those people are not going to be able to survive this. And so there should be some more opportunity here coming.
Yeah, no doubt. Now you're doing a lot of projects at once, and you as you mentioned, kind of a nimble team. What are you doing to kind of balance? 8 projects at once. Are you developing some of them for other people? Are they all internal? Are you kind of coming to the table after architecture is already done? Are you kind of taking every single one of these projects from A to Z?
No, it's every single one. They're all in different phases. So that does sound a little overwhelming, but as I mentioned, we're selling one now. We're in entitlement on, a couple. One developer can usually handle a few entitlements because that's not a full-time job. You submit and then you're waiting, right? And when you're selling, it's like all hands on deck. But then when you're done, which is hopefully a pretty short sales cycle, it's you have to maintain the workflow. But I'd say that at any given time, those, call it 9 projects, there's 3 that are being constructed, there's 3 that are in entitlements, there's 3 that are more in dispositions. And so that hits different portions of the company and roles. And so doesn't always work out perfectly, but there's busy times. The spring and fall are really busy, and then things slow down over the winter and people travel in summer. And so you just kind of have to balance it, but it's not like all at once. And once something's under construction, your main job is making sure it's on budget and schedule. And that's a lot of the GC that we lean on. And so we have really great partners we've worked with over and over and over, and we can expect. And so if you have the right people, it doesn't have to be internal, but if you're using, if we're grooved in, which we are with our accounting team and our GC team, and even outsourced project management, outsourced property management, you're leaning on your partners a lot. So your main job is just making sure they're doing their job. And if you know that they can and you've worked with them before, it makes it a lot easier. And that takes years to really hone in on, you have to go through a couple sometimes.
I couldn't agree more on finding the right people, and finding the right GC. Project management folks are critical to keeping your projects on schedule and managing those budgets like you had mentioned. But picking the right person, like you said, is not always a guarantee on the first go around. So it sounds like you guys are kind of already gone through that gauntlet, if you will, and you're made it through to the other side and kind of ready to continue to grow smart and fast. Well, I wish you guys really, well, if people are interested in learning more about you or the company, where can they reach out and find you?
We're pretty active on LinkedIn. We usually do a couple of posts a week to kind of keep people updated on where we're at. So that's just CA South. That's our LinkedIn. Our website has all of our projects on it. That's casouthdevelopment.com. And there's a contact sheet on there if anyone, has any further questions. And then the project we're selling, the STR one, is HyveNashville.com, HYVE Nashville.com.
That's a cool investment for anybody who's looking to, get a short-term rental. You can't go wrong with Nashville. I'm sure it's a beautifully built building, and best of luck. You're, absolutely setting it on fire. Keep it up, and thanks again for coming on. Good luck with everything you guys are tackling right now.
Thank you so much.